Hi everybody, thank you for joining me today in our Pathway to Home Ownership webinar, where we aim to empower you to achieve your financial goals of home ownership. Today's topic is offset account. If this is the first time that you have joined us, I would like to take this opportunity to introduce myself. My name is Nani Johnston. I am an experienced mortgage broker with a passion for home ownership and financial literacy. I am self-employed and working in partnership with Rise High Financial Solutions, which is an Adelaide-based family business. We were recently recognized as the best independent mortgage and finance broking business in Australia at the MFAA 2017 Excellent Awards, which we are very, very proud of. Before I start, I would also like to put in a disclaimer that this presentation is for information and educational purposes only, and please do not construe it as a financial advice. You should always seek an expert advice to make sure that the advice is appropriate for your individual financial circumstances. We expressly disclaim all liabilities arising out of errors or misuse or misinterpretation of any information provided in this presentation. Okay, now that we have got all the official stuff and the legal stuff out of our way, let's start talking about offset account. In this seminar, I will talk about what is an offset account, how does it work, what is the pros and cons of having an offset account, and of course, as usual, we will end the seminar with setting of our SMART financial goal. So, what is an offset account? Generally, an offset account is an everyday transaction account that is linked to your home loan account with the purpose of saving you money and pay off your loan quicker. Basically, the balance in your offset account, well, it offsets the balance of your home loan account on a daily basis. In my discussion with my client, as their mortgage broker, it is important that I understand whether or not they wish to have the offset account linked to a variable or fixed home loan, and also whether or not they need a single or multiple offset accounts. Now, how does offset account actually works? Well, interest is charged daily on your overall home loan balance. So let's say if you have a $100,000 home loan balance and you have a balance in your offset account of $10,000, this means interest is calculated on $90,000 only. How good is that? So the more money you have in your offset account, the longer you keep that money in your offset account, the less interest expense you are incurring on a daily basis. The idea is that all your income will come into your offset account, and then all expenses are paid out of the same offset account. So you see, it works just like a normal transaction account. Offset account works extremely well in conjunction with a credit card. I would suggest that you speak to your mortgage broker or myself, who can provide you a guidance around how you can benefit most from an offset account and your credit card. All right, now that we know what offset account is and how it works, let's talk about the pros and cons. The good thing about offset account, as you know it, is that it reduces your interest expense on a daily basis, which in turn reduces your loan principal. It is basically earning the same rate as your home loan rate. You have a full control because it is in your own savings or transaction account. It provides you the same convenience and flexibility that a transaction account can provide. The downside is normally there is a cost associated with having an offset account, and some lenders do have a non-transactional offset account. As your mortgage broker, these are the discussions that we will have when we're deciding on the right loan product for you. So there you go. You have learned what offset account is, how it works, the pros and the cons. Now it is time for us to set your SMART financial goal in relation to this topic. If this is the first time that you're setting your SMART financial goal with me, then you need to know that your goals need to be specific, measurable, attainable, realistic, time-bound. So for example, if your goal is to pay off your loan faster using an offset account, To be specific, you would like to maintain a minimum of $1,000 in your offset account on a daily basis. How are you going to measure this? Well, you will put away $100 per week of your income for the next 10 weeks to achieve this. It is attainable because you will reduce your dining out to 1 night a week only instead of 3 nights a week, which equates to about $80 in savings. And you will reduce your coffee purchase to just 1 a day during the week. That is $20 savings. This is realistic because you have a full control in reducing your own expenditure. And well, you will start doing this from next Monday. That's it from me, guys. Thank you very much for joining me today. Thank you for listening, and I hope you have found the webinar to be beneficial. Please put in any comments and feedback. I always appreciate them. If you have any questions, please email me on nani@risehigh.com.au. Until next time, keep up the good work. Bye.